Hello guys, how are you doing? Can you hear me? Very first time doing a live here on YouTube, so excuse me if I am a noob. But let me know in the chat if you can hear me or not. If you can hear me properly. Actually, I'm going to. That's okay. Can you hear me? Okay, nice. Perfect. So I'm going to start with a recap from yesterday's live session. Of course, most of you, you were in the live session, but just to follow through what has been happening with the main pairs that we watch daily. Well, on gold, we were expecting a retracement. If we go to a 1 hour, this is the main bias on gold, coming back into a discount level of the current range between this low and this high. Anything inside of this range is going to be internal liquidity. We have a massive void. We selected a couple of points of interest. So we are expecting price to continue pushing higher from these levels. My bias for gold would be to come back into this order block here that needs to be mitigated. We also have an imbalance here on the daily, and then continue the downtrend to go even lower on gold. Well, yesterday I was in a one-on-one, and well, we didn't see this one on the live session. Well, here for USD JPY, I was expecting price to go higher from this point of interest here. You can see a price touched this level and continuing higher, but we are going to start doing analysis now, don't worry. And Euro USD, where is my Euro USD? Here. Okay, Euro USD. For Euro USD, I was expecting price to do this movement. Yesterday, when we were looking at these levels, we had this all high here, which is internal liquidity. We also had the high of the day up here. You can see a price build liquidity, equal lows. The overall bias is bearish since we started a big retracement. If you haven't watched any of my videos, in one of my recent videos, I talk about this retracement on the daily chart for USD. So far, so good. We touched this order block and price started a retracement. My expectation for USD is to continue going lower into these levels here. But well, it might not do that. We will see. But this is my bias, to go underneath, taking out all these lows as liquidity. Basically, this all is internal range liquidity, all these lows that we have here, coming into a discount level, and from here, ideally, trying to push higher. Overall, EURUSD is bullish. The target for the current range, we can see a price is bullish. Obviously, if we go to the monthly chart, we have a bullish break of market structure overall here. We are trapped in this range from this low to this high. Price has come back into a discount level of the range. From here, broke the structure to the upside. We have a break of market structure. We did a retracement, and now price is trying to push higher one more time. So the next logical target for the current range on the weekly, daily, and monthly trends is going to be this one. So I expect EURUSD to continue pushing higher. However, now that we are on a premium level, where Sourcesmartmoney previously distributed from, I expect some sort of retracement into a discount level before pushing higher. That's my overall bias. Give me a second, I will open my second screen so I can actually look at the chat while I talk with you guys. Give me one moment. Okay, perfect. Let's move this one here. Okay, perfect. And now Blake is joining the party. Blake is the owner of BBS. His YouTube channel is Trade Connect BBS. You probably guys know him. Hello, Blake. Can you hear me?
Hey, how's it going?
Hey, how are you doing, man?
Good.
I was just recapping the analysis we did yesterday on the live session. Just a quick recap and seeing how the moves played out and what are the expectations so far. So yeah, so let's look at what happened today on USD. First, let's delete all this. So what is going on here on USD? This is the main order block that is producing a move to the downside, okay? Yes, this live session is going to be on the channel, don't worry. It's going to be recorded. We have this order block. The idea of why I choose this order block to be the initiation of a downtrend is because if we go back to the weekly chart, we can see that we had a distribution inside of this range here. After price broke down into this distribution, price came back to test it with this week and then continuing lower. So basically this week here on the daily chart is an order block that is the last point of support, of supply, of this distribution on the lower time frame. So basically this week is going to be my point of interest on the daily to initiate a move to the downside, ideally grabbing liquidity internally from the current range, which I will remind you is, wait, let's delete all of this so there's no noise. The current range where price is currently in is from this high to this low. We are currently at a premium range, so for a higher time frame long-term long buy, I will be looking for a discount level which is inside of this level. We can see at this move to the downside, grab liquidity below these lows and then continue pushing higher. So all this area is an area where price could potentially continue the uptrend from the weekly and monthly. But anyways, for now we are stuck within this range of this order block. We expect price to produce a retracement, so let's jump into lower time frames and see what's going on. We can see here on the 4 hour we had a breakout market structure here to the downside. In spite of this breakout market structure, price reaccumulated down here and initiated a long here to grab the liquidity of this high. So after grabbing the liquidity of this high, this was an old high, this liquidity is now grabbed, okay? We had a lower time frame breakout market structure one more time. If we jump into the 1 hour chart, we can see a price distributed inside of this range and then continue going lower. If we want, we can try to label this as a distribution. Let's see, maybe on the 50-minute chart it's clearer. Well, what I do see here is that we have multiple distributions. This is one distribution, primary supply, buying climax, automatic rally, uptrust of distribution, break and test. But this is part of, here we didn't break the structure actually. This only was a sign of weakness. You can see a price failed to go underneath this primary supply, so price wasn't ready to continue on lower. However, after we broke successfully here, what is going on? If we look at volume, well, in this case, it's a coincidence that is the end of the day, but overall for a breakout market structure on a distribution, what we want to look for is for increased volume, okay, on top of closing below the range. In this case, volume is decreasing while price is moving lower, so this move to the downside has no basically willingness to continue going lower. On top of that, we can add the fact that we had some kind of manipulation here, consolidation, a range where smart money stop hunted highs and lows. So why would smart money be stop hunting highs and lows here? What is the purpose? Because maybe they want to grab more liquidity on the buy side here, and that's exactly what they did. Price came back up, grabbed the liquidity above these highs. Now you can see that these highs were relatively equal highs. We have a tiny little liquidity push there, and in spite of that, we know that there is going to be still liquidity at all these highs. This the previous day high. If you watch my videos, you know that this is a point of liquidity. So the previous day high was attacked after the previous day low was taken. So look at this. We are in a range, so the condition, the profile is that price is going to stop hunt high and lows. And we can see that on this particular day, the previous day low was this one right here. Let me mark it as the previous day low. After price grabs this liquidity, it initiates a consolidation, a campaign, a cost to push price higher. And what is the next logical pool of liquidity? The previous day high, which is this one right there. After that previous day high was taken, price continued going lower, broke the structure one more time here. And after breaking the structure, we had a test and then continuation lower. So basically we can identify a trend here. Since this breakout market structure happened, we can identify the origin to be this high here. this being the low that was created. After this low was created, actually this is the low that we should take into consideration, since we have a nice wick to the downside here. In terms of this market structure, this was the swing low, this was the swing high, the lower high, and this was a lower low. What is going on here? Why price didn't respect the previous lower high, which is this one, is because price in this case is coming from a higher time frame level. Remember that every time price comes from a higher time frame level, we can expect the lower time frame to be seen as internal liquidity, and we can expect liquidity graphs. Okay. So for example, just to put it theoretically on an example here, let's say we are on an uptrend like this, price is making high highs, high lows, but we add the information that we are on this downtrend like this. Okay, so this downtrend is from a higher time frame, the green one, and this red one is from a lower time frame. What is going on? The red one is on an uptrend. Yes, of course, it's on an uptrend, but it's hitting a higher time frame level. So we can expect this low to be seen as internal liquidity, and even external liquidity down here to continue the downtrend. In order to know if price is going to actually break this low, we need to factor in more higher time frames. But just for the sake of this explanation, when price is hitting a higher time frame level, we expect this low to not hold. The chances of this low holding are lower compared to the chances of it holding if price was down here, when we still have higher targets to be met. So basically there is room to go higher, so price can actually continue going higher. But in this case, if we look at this wick here, it's touching a higher time frame level. Why? If we look at the 1 hour chart, we can see we had a consolidation, reaccumulation, lower time frames. Price touched this accumulation and comes back up to grab the 50-minute chart liquidity that was built here, basically internal liquidity. So on the 1 hour chart now, we can clearly see that price is trapped between this swing point here, the last lower high, and this one, because this is a consolidation. I don't consider this to be a pre market structure. So basically price is trapped between this low and this high. These are our swing points currently. Okay, so that means that price currently is at a discount level, and we can expect some kind of retracement to happen to mitigate this order block that happened yesterday, which was very sketchy, by the way. So let's look at the lower time frames and see what's going on. We can see that today we had a process of engineering liquidity on the sell side here. After that liquidity was engineered, price made a fake move to the upside, inducing buyers into the market. So imagine less informed traders or retailers seeing this as a support and price breaking the structure. They will start buying and buying and buying, and when it comes to the retracement of this swing up, they will continue buying. So we know that below this low there are going to be a lot of sell stops. Price goes after that, grabs the liquidity below those equal lows, and now it's trying to push higher one more time. So what is the next logical target for price to go to? If it is coming from grabbing sell side liquidity, okay, the next logical target is going to be to grab the liquidity above this high. Why this high? Because we remember that we are trapped within this range from this low to this high on the 1 hour chart. If you want, you can add the fit tool to know exactly where 50% is. You know that roughly above 50% is where smart money wants to sell from at premium, and roughly below 50% at discount is where they want to buy if we were on a bullish scenario. In this case, we are bearish. Okay. So what is the idea now? The idea is that we expect price to continue pushing higher and test this area, which is an order block. This is where smart money captured liquidity above this high and then pushed lower. Okay. So within this order block is where I expect price to come back to mitigate orders, and then I maybe continue going lower. So our scenario is to look for shorts here to continue going lower. Okay. Can you look for longs here? Yes, you can. But the problem is that you're going to be entering a risky trade because the overall trend is to a downside. So if you're going to counter trend, the probabilities of your trade being successful are going to be lower. Okay. But anyways, so this will be the idea, to come back to mitigate this order block and then potentially continuing the downtrend to go lower. This is based on the idea that on the daily we are initiating a potential retracement into this order block here. Okay, so we are trading aligned with our expectation. However, we have to acknowledge that we have a void in efficient price action with an order block on lower time frame that was broken and never tested. So when price does this, if it does, when it hits this level, we are probably going to have some kind of mitigation, basically a pullback. Okay, and this pullback could maybe be a longing opportunity, but it could be a longing opportunity. So we have to pay attention to this level as well. If we want to select a level within this range, what do we see? We can see we had these swing points like this, and then a break of market structure. This was the most recent break of market structure here. When this break of market structure happened on the 1 hour, we have this void or this imbalance here that was not filled and mitigated areas. Below here we have a lower time frame, probably accumulation. Let's see. Yeah, we can consider this to be an accumulation. We have primary support here, PS. We have the selling climax to automatic rally, changing the character. We have a secondary test here of the selling climax, testing the quote-unquote demand. Secondary test, testing the quote-unquote supply on the automatic rally. And then we have a final spring. This spring, what it's doing, the purpose is to induce sellers to come into this market, because those sellers are going to be placing the stop loss above this high and above this high. That means that when price pushes higher, it's going to be driven by the buy stops of these stop losses. So it's going to be easier for smart money to move price higher. Okay. So after the spring was made, you can see here price was failing to go lower over and over again. We could say that we had a campaign of reaccumulation on this price action, maybe on lower time frames. Let's see a 5-minute chart. What do we see here on the 5-minute chart? Okay, we have a pullback into this level. This would be the final order block that was created, grabbing liquidity below this low. Price made this move up, breaking the structure on lower time frames. After breaking all the structure, price comes back to a discount level. They make this fake pullback, inducing buyers and sellers, basically taking everyone out before the next big move up. And we can clearly see that within this story, the last move that grabbed liquidity was this one, inside of this range. This large impulse to the downside grabs liquidity below each one of these lows and then pushes higher. Okay, so within this order block, we can select this to be an important level where smart money lastly accumulate orders within the main order block. And we can see that this order block was broken here, and after being broken, price barely tested without touching the order block. So I think when price comes back into this level, this area that was untested is going to be relevant for us as a point of interest. Okay, because it was broken and never tested, inefficient price action within this range, so it makes sense. But anyways, the idea for now would be to look for a shorting opportunity if price gets to this level. If, only if. Okay, our expectation is that it's going to go higher and then lower. Blake, do you want to share anything about any trade that you're looking at or something like that?
Yeah, I'm looking at a potential NAS opportunity right now. I'm going to look at the NAS chart.
Yeah, if you want, you can share your screen as well if you want.
Sure. Why don't you go ahead and start off with the very short term? I'm basically saying that according to Elliot wave analysis, I think this recent low could be a true low for a little while, not forever, but I think it might be a significant low.
Okay, so according to last time I watched NAS, I was expecting a retracement into this level, since we had a bullish break of market structure on the weekly here, and price needed to mitigate this accumulation that we have here. So now that price has come back down here on the daily chart, we can see that there was a downtrend being initiated to come back into this level. We have to identify within this range which are the important levels to watch. We can see that the main order block within all this range is going to be this one, this last move to the downside. If you want, it could be also spring if you want to consider a Wyckoff schematic or maybe on lower time frames. But the idea is that this move on the daily chart grabs liquidity below these lows here and then initiates a move higher. After this move higher, price fails to break this low and continues going higher. We can clearly see that this is a reaccumulation. I don't need to explain the phases. We can simply see how price is building liquidity on the buy side to accumulate buy stops and attacking the lows over and over again. They are doing this process of reaccumulation and then breaking higher. So this reaccumulation was broken. Price now is coming back to test. So my point of interest would be situated inside of this level. So let's go to lower time frames, 1 hour, just to have a rough idea of what could happen or where we can expect a move higher. So what do we see here? We have an accumulation, distribution, accumulation. This was the last accumulation. Break of market structure. Price comes back to test and then continues going higher, breaking this reaccumulation. So basically, this is an accumulation. This is a reaccumulation. This reaccumulation was broken to the upside. Price never came back to test this level. So my point of interest would be within this area where we have a void and this untested reaccumulation, sorry. I don't know if price bounced from here, but this would be my overall point of interest to look for a long. So let's send this to the right. Yeah, we can see a price hitting that level.
Almost exactly the 50%.
Yeah, yes. And probably down here, there are a lot of things that can be refined inside of this area, but since price already started moving and we have a bullish break of market structure now on the 1 hour here, we are going to go down into lower time frames because this probably looks like an accumulation. Yeah. Primary supply, selling climax, automatic rally, secondary test on phase B, failed uptrust action, spring. So after this move happens, we can see the first break of market structure. Let's go to the 5-minute chart to be more precise. We have this as a premium support, sorry. After breaking structure, price made this pullback and then continuing higher. So I think for now on lower time frames, I would love to see price coming back down here, but I think the chances are that price is going to continue higher and this order block is likely going to hold because we are on phase E of an accumulation and we are start making higher highs and higher lows basically. That's what I see here on NAS. What do you see, Nick?
I see something extremely similar, just with a different trading strategy. So,
you want to share your screen?
Real quick? Yeah.
Okay.
Okay. So now, from my perspective, I'm using Elliot wave theory. So let me first start off by looking at my overall analysis. I'm going to decrease this one. This would be a smaller degree here. So for anyone that's not familiar with Elliot wave theory, how it works is, let me go into a little higher time frame, so I can explain this a little better, that basically there's going to be 5 wave structures, and then after 5 wave structures, there's going to be usually an ABC, a corrective wave structure. However, inside of a corrective wave structure, there's the A, B, and the C, and inside of the A waves, they're not always going to be 3 waves. They're either 3 or 5 waves. So for example, if it's usually 5 waves. So in this example here, the reason why I wrote a 5-wave correction up instead of an ABC is because I'm only looking inside of the A. I didn't even mark down the smaller ABCs. I'm just looking for a move up. For the move down, I'll go ahead and show that as well. The reason why I was even looking for a buy in the first place is while this was a really small 1-2, it followed all the rules necessary to be a complete 1-2, especially duration-wise. This 1-2 is approximately as large as this 4 here, so it's very, very relevant. So we have a down move, an up move, a down move, an up move, and then one more down move. And even if you subsect this was really interesting when you were looking at this down move here, and you're looking at the Wyckoff distribution for this, because I look at this from an Elliot wave perspective, and we can see the exact same fractal nature pattern. Oh, I'm going to replace that 3. 3 goes here, man. So for example here, and it follows every single one of the Elliot wave rules. It's supposed to be exactly like this, and it is. This is just more confirmation that we are on the right track. We are marking this up correctly, which is super awesome. So then we can go back to the smaller time frame. Go to the 5-minute, for example. And I chose to put this 5 here for now. I could be inaccurate, and this 5 could go a little higher. It's a little too hard to say, in my opinion, but the reason why I liked it here is because of possible a diagonal ending for this 5 here. And because this correction was deeper than this low here, and whenever you find a correction that's deeper than the other one, they're usually on different degrees. So if you're not familiar with what degrees are, if you're rather new to Elliott Wave, you can go to the degrees tab and you can find the Elliott Wave stuff right here. So this is the impulse wave, and then basically we went down. So this has to be a different degree, or in this case, a larger degree. So this is basically what I'm marking up. I'll just go ahead and show this on the 1 degree higher now. So this entire 5-wave structure, because the nature is fractal, the entire 5 becomes a 1 on 1 degree higher. And then we're basically expecting this kind of formation to happen in the future. I'm just randomly placing these a little bit. We'll have to move them as more price develops, but it should roughly follow this pattern. So we should be headed up, which is why I was bullish about this. It was really interesting how Smart Money Source was noticed this point as well as being significant. It's interesting they both found that on 2 different strategies.
Nice. Yes, I want to point out that Elliott Waves is a very good strategy for indices and stocks. It works very well since it was created based on UF30 or the Dow Jones, so there is a high statistical probability patterns that happened in the chart, and well, that's how Elliott Waves works, identifying those kind of patterns.
Exactly. Well, let me show one more example of the fractal nature, and then also we can see exactly what I think will happen in the very near term, and I'll probably be taking this trade.
Okay.
So let's go ahead and go all the way down to the 30-second chart, which of course is very, very small. And the first thing I want to point out is how awesome this formation here is in this 3. 3 waves tend to be the most clear in Elliott wave theory. They tend to be picture perfect in terms of the overall formation of it. But as you can see, it had a clear wave 1, wave 2, wave 3, wave 4, and wave 5. And all that, again, in every single 1, 3, and 5 wave, there should be a 5-wave pattern. So inside of each of this wave, and this wave, there should be that pattern. So now, if we look at the very, very short term of what just happened, there should have been an ABC where we had this down move here, an up move, and a down move. And so this is a very, very good example of an ABC, and this makes me feel even stronger about this particular analysis. Mm-hmm. And so from there, we can know that we are very likely on the right point. And we should be actually turning around very, very soon, because I see a 5-wave pattern already forming on a very small degree. So I'm going to use the micro degree for this. It's already on the micro degree, which is perfect. So we have a 5-wave structure already there on a very small degree.
And we have an ABC.
And then an ABC, exactly. So we went down, we went up, and now we went down.
So we can expect another wave up now, a little bit up, and then continue another wave down, right?
Exactly. So in order to know, we can be even more specific than this if we go even deeper. Like I said, Elliott Wave is completely fractal. As long as the instrument has enough data to back it up, we can see even on a small time frame.
This is the 5-second chart, right?
Yes, I'm now on the 5-second chart. So super, super fast. As you can see, these candles are going to be forming as I'm speaking. So basically, if you look at these patterns, we may have already finished. We could have a really ugly 5-wave down. Usually C waves have 5 waves. There is exceptions for it to be 3 waves as well, but those are very rare. So it's almost always going to be 5 waves, and it doesn't really look very good. Technically, this could be a small wave right there. So there's a possibility that we turn off from right now, but we could also see just one more wave down.
Well, in terms of liquidity, what I see here is that obviously we just grabbed the liquidity below this low, basically sell side liquidity. We are trapped in this range. We are at the discount level, so price needs to come back into a premium level, and I do see here this order block where price is approaching now. That needs to be mitigated, of course. So probably we are going to initiate another move down from here, from this level. Very possible.
Got it. Well, so far you're looking very accurate.
Yeah.
So You should know where is the most of this C wave can be, because Elliot wave has very strong rules. It's completely rule based. It's not, you can't just make whatever waves you want. There are certain rules for these waves. For example, for this C wave that's either forming or just finished forming, one of the two, we cannot go below the start. The reason why we can't go below the start of this smaller degree, I also need to fix the degree on this one. The reason why this C cannot be below here is because then on 1 degree higher, it's not a time frame, but you can kind of think it like a time frame higher. Then the 2 wave, the second wave, would be too low. So this, if the C is too low, the C goes wherever the 2 goes. These go to the same place. And there's an Elliot wave rule that says that the 2 may not go below the 0. So therefore, I know. And this is that the 2 should not be going that low, and therefore you can even have a stop loss. You can even have, let's say that we're to buy it right now, for example. Again, not saying that you should, but if you were to buy right now, you can have a stop loss right here. And while that stop loss is not guaranteed, it's extremely likely that stop loss will not get hit according to the rules of Elliot wave theory. And then the take profit would not be there, of course. We'd have a much higher take profit. But like I said, we can get a better entry.
Yeah, that would be an Elliot wave entry, right? Based on the rules of Elliot waves.
Yeah, I'm going to look at this on my broker chart. I'll go ahead and let you talk about this a little more if you'd like.
Okay. Can you guys see my screen, right?
Yep.
Okay. Going back to USD, we can see here on lower time frames, USD seems to be creating a distribution. We have some waves here from Wyckoff. Let's see, the 5-minute chart. Got a nice break on my structure here that we anticipate to be a stop hunt. However, well, my bias is still to go higher here. It could happen from here where price is currently in, or from down here ideally. We can see a little bit of thin or inefficient price action down here, so it makes sense to make a kind of reaccumulation, filling a void, touching an order block, and then continuing higher. We will see. However, my focus is to short. Okay, so I'm not going to be scalping right now. I could, but since I will be explaining lots of things, I like to be very concentrated when scalping. It's very difficult to scalp when you are explaining absolutely everything. So, guys, let me know which pairs would you like to analyze. Okay, and I can look at them.
I saw AUD USD and also GJ.
Okay, AUD USD. Okay, let's take a look at that one. AUD USD here. Let's do a top-down analysis from scratch, so you know exactly how I do it. If you see my videos, you know how I do it, but just for you to know. So what do we see here on AUD USD? On the biggest scheme of things, we are absolutely bullish since we broke a major structure here, and price ever since has been making a retracement into the origin of all this move up, which is down here. We can identify all this monthly swing here as the order block where smart money accumulate orders. Okay, why this is an order block? Because if we look at these swings here, the last move that grabbed liquidity below one low, this move grabbed liquidity below this low and produced a break of market structure. Break of market structure was this one. So this will be the main order block. Okay, so ever since price has been mitigating this order block, obviously on Forex we cannot expect price to continue pushing higher and go above this high, since it's not the same nature as with indices or stocks. Okay, so most of the time on the biggest time frame, the pairs in Forex are going to be consolidating over and over again. However, that doesn't mean that we cannot trade. Obviously we can. So we have to interpret what is going on here from the structural point of view and from the liquidity point of view. So from the structural point of view, we know that we are bullish on the highest time frame due to the fact that we are coming to grab internal liquidity below this low, and now price is trying to push higher from a discount level. So the next logical target for price to go to are going to be these highs and these highs here. Why? Because this is internal liquidity. Currently price is trapped within this range from this high to this low. We haven't had a break of market structure yet on the monthly. In order to have a break of market structure, we should be able to break this high here. So price could easily continue trying to go lower from here, and as a matter of fact, it's very likely that we are going to see a retracement coming soon. But overall, my bias is that we are going to break this high. This is a structural high, and once we break it, it's confirming a bullish bias. Okay, we have the bullish bias, but until it doesn't happen, we cannot tell. Okay, we have the expectation that it's going to happen. So the idea now is that price is trapped within this range from this high, sorry, to this low here. The most recent break of market structure happened to the downside here. Okay. In spite of that, we know that the chances is that price is going to continue higher, since we are coming from growing liquidity on the sell side and bouncing from a higher time frame order book. That means that the next logical target for price is going to be to target this high. So I'm going to place this as the monthly target. So now let's start going deep into lower time frames. What do we see here? We see that on lower time frames we have a kind of downtrend here. This downtrend was broken to the upside here. So this was the very first break of market structure here. And that means that this move to the downside is an order block, okay? Now price is pretty far away from this order block, so we are not going to care much about it. After this break of market structure, we have 2 months or 3 months of consolidation here, and then price broke the structure one more time. So this is the most recent break of market structure on this degree here. The origin of this break of market structure was this low. We are going to go down on lower time frames now, but just to have it in our chart, this is the low and this is the high. That means that on the monthly chart, we are trapped within this range from this low to this high. Are we bullish or are we bearish? We are bullish because we identified this to be the next logical target. So are we at a premium or are we at a discount level? We are at a premium level, so we can expect for a long-term buy for price to get into this order block. Could it happen that price continues going higher without getting to this order block? Yes, it could happen, of course. But we need to play with expectation, and then when price starts moving and reacting of our levels, then take action, okay? So for now, on the monthly chart, for a long-term long, we will look for a long down here. Does that matter now? It doesn't matter because price is way higher, so we're going to go deep onto lower time frames now. Okay, so here we are on the lower time frame, and what do we see here? On the weekly chart, we can see that price has been consolidating here within this area of this order block. You can see that we had an order block here. All this area is a main order block, and particularly inside of this area we can, on lower time frame, probably this last candle is the most premium order block, but we don't care about that now. We care that we are trapped within a range where smart money is mitigating orders, and that's why we are seeing a consolidation. Every time price is hitting a higher time frame level, price is likely to start a consolidation and range where they are going to reaccumulate or distribute. That's what happened here. They reaccumulated, and that's what is happening here. They are probably reaccumulating, okay? So what do we see here in terms of liquidity in the weekly chart? We were coming from a bullish trend, higher high, higher low, higher high. After this higher high that touched the highest and most premium level, we can see a price made a move to the downside. And the reason that price didn't respect this low is because we are coming from a monthly chart level, and this is a weekly level. So remember, when we are coming from a higher time frame level, the lower time frame turns into liquidity. So now price is coming from grabbing the liquidity below this low here, and after that happened, price pushed higher one more time. Why? Because now the liquidity is going to be sitting on the buy side. And what do we have as buy side liquidity? All these old highs that we have here. We have this high here, and this as an order block. We are going to look at that now on lower time frames. So on the weekly, we could say that we are on a bullish trend because price was on a downtrend like this, and now we just recently broke this structure, okay? Meaning that we have a bullish break on market structure. But we cannot see more than that, we can annotate here that we are very close to the previous week low as liquidity pool, previous week low here. Price is coming from testing that previous week low and trying to push higher now, but let's go to the daily charts. Okay, what do we see here in the daily chart? After grabbing the liquidity below this low, which was a weekly low, remember, price consolidated, push higher, consolidated again, and now it's trying to push higher but making deep retracements. This already looks like a kind of distribution. But in order to know that, we are going to look for lower time frames. What we need to understand now is that we were trapped in this range from this low because it was the last lower low on the weekly, and the last higher high on the weekly was this one. Inside of this range, we have this as internal liquidity. We have a tiny little void daily there, and it was just filled. That means that price is now touching a higher time frame level here, and this is seen as internal liquidity of this range now from this low to this high. So on the daily chart, my bias for AUD/USD is going to be to look for shorts, because we have this all low, the previous week low, and we have this consolidation which where smart money actually accumulated orders from. Okay, so on the daily chart, I would love to see price going lower than this low. So I'm going to set this as my daily target. So if we want to look for a short, we need to identify lower time frame structures in order to anticipate where price is likely to going to go to. What do we see here? We are on a downtrend, obviously on the 1 hour chart. We can identify the swings. We had a probably distribution here. The distribution was broken, the very first break of market structure. Price came back to test that distribution. This order block that we have here, this order block was the one in charge of grabbing the liquidity of these equal highs. You can see price built equal highs and was taken by this move. Price came back to the order block, mitigated, filled a void, and then continuing lower. Okay, this is a redistribution, okay, and it's a test of this order block and this distribution. Later, price made a move to the downside, made a tiny pullback, redistribution probably in lower time frames, and made another move to the downside. What are we seeing here? That price, when it's hitting this higher time frame level, is having a hard time trying to go through and again consolidating. You can see that smart money, the concepts, and Wyckoff are all fractals as well. The same thing that we saw on the weekly when the daily chart was hitting a weekly level, or the weekly was hitting a monthly, the weekly starts consolidating. Here, the 1 hour chart is hitting a higher time frame level, weekly level, and it starts a consolidation. It's the same fractal. So what can we interpret about this? We know that we are on a consolidation, so we can expect stop hands on the buy side and on the sell side. We can already see here how price is building liquidity on the buy side with this trend line and attacking the sell side over and over again. So this already looks like a kind of accumulation. That means that if price breaks this level, the higher boundaries of this accumulation, we can expect a test and then a continuation to a premium level. Where is that premium level going to be? Here. This was the backup of this distribution, and it's a redistribution itself. We can see that when price broke out of this range, it didn't test it. Price tried to go into this level, but it failed. So there are orders that needs to be mitigated within this range. So we can expect price to come back into these levels, okay? And you can see how this scenario is similar to the one we have on EURUSD, to move higher, to mitigate orders, and then continue going lower, because remember that we are bearish on the daily, the daily bias is bearish basically. So what can we do now, okay? This is our expectation. We want to break out of this range that we identify as an accumulation, and after breaking, price comes back to test and then continues going higher, okay? So let's go to lower time frames and see what is going on here. We can see the same process happening here. Price building liquidity on the buy side, attacking the lows over and over again. Classic accumulation. And accumulation is going to be completed once we break out of this range, and this range starts, let me delete all this. This range starts roughly around these highs here. We can go lower on lower time frames. Well, lower time frame, it's a different story here. We have multiple different accumulation distributions all over the place. The most recent accumulation was this one, was broken and tested. So basically this is the backup. This is the break of market structure of this accumulation here. And this range is the backup of that accumulation. So this would be a point of interest. If price does retrace into this level, it would be a good idea to look for longs one more time. However, on the bigger time frame, we want to see this high getting broken. And after the high gets broken, price is already on a bullish mode. So we are going to expect a reaccumulation to happen, basically something like this. And then continuing higher. Where to ideally to this point of interest, but we have to acknowledge that yesterday was a lot of volume inside of this area, and this level could be a level where price might respect. Okay, so this could be another point of interest. What do we see? We have a nice move to the downside that was originated from this high. Then this high was broken by this candle and price continuing lower. We had a lower time frame probably distribution here. Let's see. Yeah, premium supply, buying climax, auto anti-rally, secondary test, uptrust, break of market structure. This distribution was broken and never tested. So this order block needs to be mitigated. So this is going to be a nice point of interest as well. Okay. So for now, the bias is to go higher, test any of these 2 points of interest, and then try to go lower. That would be the overall bias. So let's mark that on the here, something like this. This is my bias for AUD/USD, either bouncing from this level or from here. Of course, you don't need to look for longs or shorts. You can look for directly shorts, which are the ones that have the highest probability of winning, since we have the daily bias to be bearish. Well, you can also look for longs here, of course. So let's look at other pair now. Let's look at, well, I have a lot of pairs here that you guys are saying. The second pair that you told me to analyze was GJ, so let's look at GJ now. Wait, let's use Blake. If you want to add something or you want to review any chart, let me know, please.
Will do.
Okay.
By the way, I entered on NAS.
On NAS, you are on a long?
Yep. Just a small entry, of course, but yes, did enter.
Nice. Okay, I will open this one. Yesterday, we were looking at on a 101. We were looking at this pair with one of the students, and it was really cool how he identified the distribution here. And we anticipating that if price broke this low here, it was going to test and continue lower, and it played out beautiful. On G, if someone is looking at GBP against the Swissy, I'm looking for a long down here and down here. These are my 2 points of interest to continue the up move. Okay. Well, let's look at GJ here. So what is going on with GJ? If you remember from my video where I talked about GJ and I did an analysis, for those guys who saw that video, I was expecting GJ to continue being bullish and hit a monthly target. The monthly target is this one right here. It hasn't been hit yet, but price continuing higher. My bias at that moment, by the way, that video is the one where I talk about the daily directional bias. I think that we were looking at, I think this low. Yeah, this is the candle, I think. I think I mentioned, let's go to a lower time frame. Oh, I have a mess here. I don't quite remember now, but I don't remember if this was a high or this one, but I was expecting a retracement into this level to have a long-term long. That retracement didn't come, but on lower time frames we have a reaccumulation that played out nicely. However, when price hit the level that I mentioned on that video, we had a very big move to the downside. But I don't remember quite which level was that one. I think it was this level here. Yeah, this one was. This was the daily high that should be respected, where I was looking for shorts at this level, I think, if my memory doesn't fail. When price hits this level, this order block, you can see we have a nice move to the downside, but it wasn't enough to go pass through this low and grab more liquidity. Basically, price was already ready to continue higher. And you can see that in spite of building quote-unquote liquidity on the sell side by creating this equal highs, or sorry, this equal lows, or this trend line, price continuing higher, because when price is coming from grabbing the liquidity already on the sell side, sometimes it's going to build this equal lows or trend line, and that's when the retail war actually works because they are already accumulating orders, and they are accumulating one more time over and over again at these key levels. That's the only way that the trend line can work, only if the liquidity was already accumulated. So in this case, we can see that with this move to the downside, price grabbed liquidity below these lows, and ever since this low was created, you can see that this is a clean order block, and before making this last push to the downside, there was liquidity being built. You can see we had beautiful equal lows here. You can see that right after the price hits this level, we build more equal lows with these two lows, and after that, boom, we create the order block. So basically, ever since that happened, this is the main order block where price has been mitigating over and over again. You can see every week that comes down, hits this order block and tries to go higher. And it is a coincidence that price creates the trend line and creates the equal lows, because what smart money is doing here is actually buying. So going back to what is the bias for GJ, my bias for the high time frames is to hit this level as the first target. Okay. So if we look at the daily chart, I anticipate that price should break this high, since we were on a bullish trend, and that's after coming from internal liquidity here and some manipulation, we had a bullish break of market structure. So the next logical step for price was to go up here and grab the liquidity of this high externally. So what can we expect now to happen? We need to identify that we are, let me delete all this because it's going to be easier. The most recent break of market structure on the daily was to the upside here, okay? This break of market structure is breaking this high here, but at the same time it's breaking a higher time frame high, which is this one. So that means that if we want to look for long, we could look at this low. Okay, it's possible. However, we need to take into consideration that the range is going to be from this low to this high, not from this low to this high, because this trend, okay, is from a lower degree. The swing points that we are seeing here are these ones: higher low, higher high, higher low, higher high. Inside of this last move up, we have another lower degree swing points, which is this one. We have a higher high, and we have a higher low, and now a higher high. So this is from a lower degree, okay? So when price comes back down here, we should find a reason of why it would bounce from here, otherwise it's going to be seen as internal range liquidity, okay? So these lows are going to be internal range liquidity. They are going to contain sell stops. So we could expect price to produce a retracement into this level and then continuing higher. However, we do see that there was an accumulation here. We have a sign of strength, a final spring, and then a break of market structure. As we had a break of market structure, this now turns into the backup of this range. So if this was the backup of an accumulation, we can expect price to come back and test the backup before going higher. So in this particular scenario, in spite of this having broken a higher time frame range, which is this one, I would consider this range to be a valid level to look for longs, since it is the backup of an accumulation. Okay. So how can we play this? Well, we have to wait for a lower time frame break of market structure to initiate a downtrend to go into this level and then a lower time frame break market structure to initiate an uptrend to go pass through this level and finally hitting the monthly target here. So let's go to lower time frames and see what is going on. Okay, we can see that within this range we have different processes that have been happening. These processes can be reaccumulations over and over again. So we can say that this was a reaccumulation spring break on market structure. When price was coming back to test this spring, we had another reaccumulation. Why do I say it's a reaccumulation without even labeling it? Because we can clearly see that price is building liquidity on the buy side, equal highs, and taking the sell side liquidity. Remember, for an accumulation, what smart money needs to do is to take out the early buyers, because the early buyers are going to be a resistance because they will place and take profits at these levels. So if there are a lot of take profits, which are sell stops from the longs from these early buyers, then price is going to have a hard time to continue pushing higher. That's why they continue pushing lower. And they create a bearish sentiment to induce sellers to sell into this market, that they are going to be placing the stop losses above this high, and the stop loss of a sell is a buy stop. Hence, when price push higher, it's going to be easy to push higher. That's why we have these voids being created here, okay? So anyways, we see a reaccumulation that was broken, tested by this move. This itself is another reaccumulation. We can see that this is the main order block. Price failed to make a lower low here and then continuing higher. We had a break or market structure of this accumulation and it was never tested. So within this range, I would look for a long inside of this order block here. So this idea isn't, could it fail? Yes, it could fail. It is possible, since these are relatively equal lows and are now seen as internal liquidity of the bigger range, which is the weekly range. But well, since I saw this process of accumulation and this being the backup, it makes sense for me to see price hitting this level and then continuing higher. That's how I see it, okay? So here on lower time frames, what do we see now? Let's see, 50-minute chart. We'll delete this so it's easier. Okay, we do see some kind of accumulation here, reaccumulation. Liquidity being built on the buy side, basically a trend line or relatively equal highs. Price is coming from attacking the lows. You can see a nice sharp move, grabbing liquidity and then producing the break on market structure. That means that now that price broke the structure to the upside, this is the origin down here. This is the main order block where smart money accumulate orders. Oh my gosh, here. And after this high, the high of this order block was broken, we can see that this is the first test. This move to the downside is the first test of this order block. Okay. This test later was broken. We can say that this is a proportion block in terms of ICT if you want. Well, anyways, it's another order block that was tested over and over again. Price broke down up to the upside and never came back to test this level. We can see that here we have another reaccumulation. Price building liquidity on the buy side, attacking the lows over and over again. We have a break of market structure, price never came back. So this accumulation was never tested, hence it's a good level, a good point of interest where price is likely to bounce off. And if we want to refine, we can identify the last order block on this lower time frame. You can see we had equal lows here. These equal lows were taken by this week and then price continued higher. So this week was originated when price on the previous candle, when smart money started selling, the candle closed, the next candle opens with the gap because they are saying they sold more and then push higher. So basically all this area is an order block. And this is probably where price bounced off. Yeah. You can see a price even retrace up to the most premium level because there is probably a lower time frame thing here going on. But anyways, so what we want to look for now is for a potential retracement into this level, okay? We do see that there is a kind of distribution going on here right now. Let's see. Yeah, we do have a distribution. Okay, look at this. Primary supply buying climax to automatic rally, uptrust, and now price is trying to break. Do we have high volume here or not? Oh, I don't have the volume. Oh, well, if someone ever asked which is this indicator, this volume indicator, this is how I use it. It's a normal volume indicator, but it changes the color of the candles depending on the relative candles, if they are smaller or higher. Anyways, we do see that there is a high volume, but this volume is coming at the bottom here, not on the entire move. Actually, yes, it is coming on the entire move. We have an increased volume here. But what is the problem here? Let's see. We need to identify why price is moving higher. Let's go to the 50-minute chart. What do we see on the 50-minute chart? We have the distribution here. This distribution was broken down there. We had a test. So basically this would be the backup of that distribution, and now price is testing the backup of this distribution. We build equal lows. So okay, now it makes sense that price is likely going to go lower. So this already, if you want to take a trade, this is a likely trade I would take here. Of course, without refining anything, this is only 1.13 RR. But well, my bias for now is to go lower to grab this liquidity, test this order one more time, and then decide to whether break this low. And if it breaks, we can expect price to continue going lower into this point of interest that we selected earlier. But for now, I think my bias is that price is likely to do this. Okay. Okay. So Blake, do you have any?
If you look at something that is hot in the news, maybe some Dogecoin.
Yeah. Dogecoin. Okay. Let me check what is going on with.
I have Elliot wave for it as well.
Dogecoin. Dogecoin, the Elon Musk coin, basically. Okay, let's look at Dogecoin. The meme coin. Okay. Oh, I don't have enough data here. Doge. Maybe Binance. Well, this chart is very funny. This is Doge. Listen to me. This Dogecoin is a meme coin, a cryptocurrency, which is very hyped. So what do we see here in terms of market structure? Obviously, we are bullish. And I know what you're looking at, Blake. I already know that you have a 1, 2, 3, 4, 5, probably like that.
Yes, exactly.
So basically, you're anticipating a deeper retracement and maybe going below this low, right?
Yeah, just a little bit.
Okay. Let's see what is going on here on the lower time frame. In terms of market structure, obviously, we are bullish. This is a bullish break of market structure. We don't have data to the left, so we have to analyze with what we got here. High, high low, whatever. We have this as the main order block. This impulse to the downside, actually from here, is the level where smart money capture liquidity below the lows and then continuing higher. So on the daily chart, what I do see is price hitting this level and mitigating, producing a retracement into a premium level. In this premium level, what do we have? This as the main order block. So I can already tell you that my bias is that something like this is going to happen for now. And we have a buy here, so it makes sense. Okay, so we have a daily buy here within this order block. Just looking at the daily, we are on a daily downtrend. Makes sense because we are retracing from a big impulse. So I expect price to hit this order block, accumulate, push higher to grab in liquidity internally between this high and the low that is going to be produced here. So these highs are going to be seen as internal liquidity. This is the void that needs to be filled. So I think it makes sense for Dogecoin to respect the daily trend that we are having currently, because the target for this downtrend on the daily is going to be hitting this order block. This order block hasn't been hit yet. Okay, so it makes sense that this daily candle, this order block that was created, is going to be respected and price is going to push lower one more time. So let's go to lower time frames and see what is going on. First, I'm going to mark this order block here. Let's go to 1 hour. Okay, this is looking like an accumulation already. We have premium support, selling climax, automatic rally, secondary test, secondary test on phase V. We might have a tiny little impulse up. That could be a failed uptrust action or simply a sign of strength going higher. And then the final spring touching our order block here. We can already see that we come from grabbing liquidity on the sell side after an equal lows were created here. What is going on now? Now that price has come back into this quote-unquote support level that was broken and now is turning to resistance, who do you think is selling from here? Retailers and less informed traders, okay? So, wait, before I continue, let me mark this tiny little schematic here so we keep it in mind. Okay, so here, who is selling from here? Retailers. Why? Because they see this as a broken support turning to resistance. So this move that is happening right now is the cookie that smart money gives to the retailers to make them think that price is going to go in their favor. This cookie is going to either reverse from here or make another move down and then go higher. Why it might reverse from here? If we do see an accumulation down here, it means that smart money accumulating orders and is ready to push higher. If we don't have any kind of accumulation, then it's likely to make another move, making another quote-unquote cookie, and then reversing, hitting this order. So we are going to see that now on lower time frames. What do we have? Well, we have a B-shaped reversal here. Nothing much than that. We do see a distribution here. Premium supply by climax automatic rally test. We didn't have an uptrust. Price broke this distribution here. Actually, no. This is normal market structure. This was the distribution here. Broke the distribution. We had a tiny little wick coming to test and then broke again to the downside. So that means that this area, this order block, is very important. In fact, that is where price is bouncing. We do see equal lows here. So for now, my expectation for Dogecoin is going to make a move to the downside. Ideally tapping this low, and from here, I think it makes sense for price to make a lower low now and then go higher. It makes sense. But we will see. Maybe it does something like this and the stop hands and then go lower. It depends on what kind of formation we have here. But well, for now, my bias for Dogecoin is to make this move to the downside. Do you want to see your perspective?
Yeah. Yeah,
okay.
I'll show mine.
Okay. I will stop sharing.
Okay, so let's start on higher time frame. Oh, what happened here? I don't know what happened. Sometimes TradingView does this, where it's a little
it glitches.
Things. Yeah. Anyways, I'm choosing on a small one, a small chart. It doesn't have as much data as the one you're using, but it doesn't really matter for what I'm showing. It's the same thing where we're coming from a low. I know that the price was lower than this. We're coming up here. We finish as the wave 1 and 2. We come up here to 3. We have a beautiful 4, and the reason why I say it's beautiful is because it has an ABC inside of it. But not only that, how you can be super certain you're having an accurate count or an accurate wave count is when you find an ABC, and within that ABC, within the B wave specifically, you can find an up, a down, and an up. B waves always are 3 waves. They're never 5 waves. They're always 3 waves. There's no exceptions for this, with the only exception being a 1 wave, but that's extremely rare. So you'd have a down, an up, and an up, a down, and up here. And by seeing this, we're super confirmed that this is a very accurate count. And that's why I say this is beautiful. I don't usually mark up these kind of things. I usually just mark up one degree smaller when necessary. And the rest of the waves look good as well. They just don't look as good as that one. It's absolutely beautiful. And then what I have here for the downside is I also think long term, I think it's due for another major move up. I didn't mark it up, but after a C wave, you have a huge impulse wave, which should go very, very significantly. But first, I agree that it needs to come down a bit more as well. I have on here a 5-wave structure, 5-wave structure to the downside, an up wave, and then I have on here a diagonal 5th wave for a C wave, an ending diagonal for the C wave, which is basically where you have a 5-wave structure where the rule that the 4th wave can't come inside the 1 is put on hold, just because it's an ending diagonal, which is according to Ralph Nelson Elliot, the guy who created this theory in the first place. He says that's acceptable. That's absolutely okay. It's not very common, but it does happen, and I think this is one of those situations where it is happening, either like this, or the only other alteration that I have only other possibility is that we're still in this 3rd wave right here. So if that's the case, then we're headed even farther down. So be going even lower than that still. But basically, I have on here that it's not quite ripe yet in either scenario for a potential buy yet. But when it is ready for this buy, it should be an absolutely fantastic buy when it is ready. And this buy should be going well above this old high here. Should be going much, much higher, much more than just breaking $1. I could easily see it hitting even $2. That should be quite amazing. I'd get the meme community quite happy from that.
Yeah.
Yeah. So I want to talk about what I saw on NAS as well. We went down just a little bit, so I adjusted my analysis and it looks like it was spot on. So I actually added another entry. This was happening while I was speaking. I'm on the 15-second chart.
Just a quick note, guys, thank you very much. I just hit 8K subscribers, so I hope my videos will continue helping you and improving your trading style. So thank you very much, and well, hopefully we can get this channel to 1 million in 1 year.
Wow, that'd be incredible. Congrats, Smart Money Source. That's amazing.
Thank you. Yeah, you continue. Sorry.
Go for it. No problem. So on here, I was thinking that the C wave was actually over here instead. I originally thought it would be a smaller wave setup, but it's important to be flexible and it's important to use low lots so that I have my first entry here, and it was profitable for quite a while. It got into more than $50 in profit from my first entry, and $61 in total. And then I just entered another entry just now. Again, another small entry, still not going heavy on these entries, but so far it's only been $11 in profit as it just entered, I think, a minute or two ago. But I did just enter this one as well. And basically for these trades, they have a 4.5 to 1 RR and a 7.6 to 1 RR. I'm expecting to stop around this level up here. Are you noticing anything else?
At the moment, no. We do see that we are growing liquidity on the sell side, like we were saying earlier, below these lows, and well, we have this all block. We will see if this all block holds. I think it is highly likely it's going to hold, but well, we will see.
For sure. So I'm seeing a lot of comments for gold, so we should definitely look at gold.
Okay.
I'd love for you to mark it up first.
Okay, I will mark it up first.
And also I want to remind everyone that if you are enjoying this, if you are getting value from this, don't forget to hit the like button.
Yeah, definitely. Okay, let's look at gold. Okay, well, for gold, I have been following it very closely. Yesterday we called a short on gold from this area right here, and it's very funny that we also called it long from down here that I'm going to talk about now. But well, my idea for gold, if we look at this, is to, well, I have this as a point of interest to make a retracement. But overall, I would love to see gold hitting these levels, filling partially in this void and hitting either this one, or maybe not, maybe just filling the void and then continuing higher. I think we talked about gold at the beginning. Well, doesn't matter. and then continuing higher to grab the liquidity internally, because on the highest time frame you can see these clear swings that we have here. We are trapped within this low, this high and this low here. Anything inside of this is going to be internal liquidity. We have equal highs. Oops, we have an order block, we have a void, so it makes sense for price to fill that void, mitigate the order block, and initiate the distribution to go even lower. Because I think on the long term, gold is going to come back and test this level here, which is the backup of this accumulation. But well, now on the short term, this is my expectation. If we would look at the 1 hour, my expectation is for price to make a move to the downside into these levels, and then ideally continuing the uptrend into these levels here. I selected a point of interest here, a very tiny little point of interest that is probably going to be a good reaction for gold when it hits that level. So take a look at 1859 or 1860 when price hits that level. If it hits, maybe I'm completely wrong, which is obviously possible. But if it hits that level, be careful, or you can even take a short from here, because I think it's going to give a nice reaction, as it is a very refined point of interest within an order book here of an annual distribution. But other than that, I think, well, we are currently on a downtrend on gold on the 1 hour. This was the most recent break of market structure here. That means that price is now trapped between this high and this low. Inside of this range, wait, let me delete some of these lines because it's very confusing. Inside of this range, from this high to this low, we have internal range liquidity, we have an order block. So I think on the short term, gold is going to make an up move. And by the way, this is aligned with my bias on AUD/USD and EURUSD, because they tend to move similar. Well, anyways, my bias is to make an up move to mitigate the order block, and then ideally make another down move to test these levels, and then continuing higher. That would be my bias. Of course, the way to trade all of this, when price gets to this order block, we want to look for a distribution or a normal market structure that gets broken, and when it gets tested, boom, short. Internal liquidity to external liquidity, internal to external, external to internal, to external to internal, and so on. Okay, that's my bias for gold. Do you have anything on gold, Blake?
Yeah, just finishing up for now.
Okay. Let's take a look at USD and AUD/USD. Okay, we are hitting this level where it is likely going to hold and push price higher one more time. So we can clearly see on the 1 minute chart, we are on a bearish trend. These are the swings: lower low, lower high, lower low, lower high, lower low. So now price is due to a retracement to take out these highs at least and mitigate this distribution. So if we have a lower time frame accumulation of any sort, we have potential perennial supply support, selling climax to automatic value, changing the character. However, if we do have a break market structure, we can call it a break market structure. What is volume telling us? We can see on this lower low, we have lower volume, no intention to go short. Basically, the sales liquidity getting diminished. So it makes me think that if price breaks this high, it's going to be a break market structure and it's going to be ready to go higher. However, I wouldn't be taking this low, because if we look carefully, what is this? Trend line, liquidity. So the next logical scenario is that price is going to do something like this, and then something like this. Nice. Why from here? Because obviously we have a void, a test of a distribution, so it makes sense. So let's see from here price starts selling off or not, but it would be nice to see.
All right, I'm ready on gold.
Okay, let me see this. Look at that, beautiful. Beautiful, beautiful. let's see if we can get that liquidity because this is not ready. What is this? Internal liquidity to external. You see, guys? Like a clockwork. Look at that. Beautiful. Well, if you know how to anticipate these moves, you can actually scalp them. When I'm scalping, when I do see this opportunity, and look at that. Excellent.
Wow, nice.
I do take these trades. For example, if I'm looking at prices ready to push higher, I will buy. When it hits my level, I will short, obviously. But anticipating the moves on lower time frames is beautiful. Just reading the structure with the liquidity on the 15-second or 5-second chart is amazing. But well, you can share your screen now. But before you share, look at this. Boom. External liquidity. There you go. Excellent.
Gotta use the rubbing strategy.
Rubbing strategy, rub. Okay, I will let you share your screen now.
Sure. All right, so on gold, I have this this recent correction as a very large ABC. I didn't mark up the A, but it's on there as well. So with an ABC head down here on this degree, this is called the intermediate degree. It's a pretty large degree. And the reason why it took me a little while to get situated is I was wondering if this was the 5 over here or this was the 5 over here. Because they're both really low. But keep in mind what I said earlier, if you're new to Elliot wave theory, that the 2 can't come below the 0. And the way I marked it up, it might look that way, where the 2 is below the 0. But if we zoom in really, really deep, we don't even need to change time frames. We just need to zoom in super, super deep. We can get a horizontal ray, and I'm going to use the control key to use the magnet tool. And if you look very, very closely, you could say this is maybe a different strategy in action, but I call this Elliot wave rules in action, where you see that it came extremely close to breaking the rules, but it just couldn't quite get there because it wouldn't work very well at all if in Elliot wave theory, if it did break there, therefore it was able to hold, and you theoretically would be able to get a trade in this very, very small area here using Elliot wave theory, with that 2 being at least holding the trade. Or you wouldn't have, even if you entered somewhere else, your stop loss wouldn't have gotten hit if you're using the rule-based stop loss. Anyways, moving on to over here, we then see a couple other really cool things that happen. We have, again, in the third wave, we have a beautiful 5-wave structure. Again, third waves usually are the best in terms of the best looking substructures. So inside of this third wave here, we have a beautiful 5-wave structure, and it works really, really well. Of course, the Elliot wave rule does apply here, where the 4 is not allowed to come lower than wave 1 or into the territory. So again, if I use this perfect like that, we can see that the 4, the lowest wick, did not touch this line on this 4 here. So we are good to go on this rule. We are all set. And then you notice it does hit over here. This helps us actually even more because this is on a different degree. And Elliot wave has another tendency. This part's not a rule. This part's a tendency that whenever you have a 4 on a larger degree, that 4 should be a similar location in terms of price level to the 4 of one previous degree. What that means is these 4 should be close together. And this is a beautiful example of that. These 4s are extremely close together in price level. And then so we can be moving up from there. So now we're looking for a 5-wave structure after this 4th wave. So for a 5-wave structure after the 4, I like this as the wave 1. There's another tendency with that one as well, but I won't be talking about that right now. And this 2, I haven't looked at which one of these 2 lows it is yet, so let's put it in the middle of them. It's one of those 2 lows. It does matter, but we can look at that later. And then I don't see an entire 5-wave structure up here yet. So what this means is I see, in terms of Elliot wave analysis, I see gold going up for one more small wave up. So I think that it should be stopping around the 1880 area, roughly, using this Elliot wave formation. And again, if we can use an ABC chart on here again. And like I was saying previously as well, the best ABCs, you can go inside of the B waves. Oops, yeah. Oops, this is the wrong degree. We'll be using this one. So if we look inside of this B wave, even without changing time frames, we can still see, as long as we're looking at the wicks, keep in mind the wicks, we can see from the A, we go up, that's the A wave, we go down to this wick here, and then we come all the way up to this top of this red wick here. So the green wick, come all the way down here, and then come up here. So we have that up, down, up. And even inside this B wave as well, we can see a down, up, down inside that little B wave as well. So this is a lot of confluence that's saying that we have at least everything is accurate up until this point. The only other alternative that we could have is if the price is going to go even a little bit lower first. That is a possibility within this. However, like I was just saying with the tendency where the 4 of this degree should be near the 4 of 1 degree smaller. Well, let's go ahead and make that 4 of 1 degree smaller. If we go, I think it's this one. Let's see. Or I'm going to use this one just as an example. I think it's this one. You can go here or here. I'm going to use this one because of what's happening now. And we can see that this 4, if this is accurate, again, I need to go on a smaller time frame to confirm this, but this 4 on this degree is extremely similar in price level to this 4. So it's very, very likely that this low holds for now. I don't think it'll hold forever. I think we're going to have one more wave up first, and then after we move up to a higher high from these highs, then we should be coming down all the way to around the 1759 area over near this other 4 here, and then continue higher after that. So I'll just mark that off really quickly, what I'm expecting to happen. Something along these lines. I'll fix the degree. This would be my minute wave. And then let me just show you on a more zoomed out view of that. So this is basically what I'm expecting to happen. First going up, and then a little formation like this. Around this area is going to be the best buying opportunity. For if you're a long-term holder, that is. And then this next wave should go up much, much higher from there, basically. But that's generally what I'm looking at. I'm looking for buys right now in the short term, and then sells for a little bit longer term, buys again for the longer term after that.
So your long term is to go higher.
Yes, ultimately in the super long term.
Okay. Yeah, I have a different view. But yeah, it makes sense. Makes sense. Okay, let's look at other pairs.
Sure, go ahead.
So what do you guys want to see? First, before we go to other pairs, I want to point out this to be a distribution. Oh, shit. Let's see. So I will consider this to be a distribution right now here. This was a redistribution rather. This was an uptrust. Price broke. And then made another pullback after the test. You can see that on this pullback, volume is decreasing. That's usually what we want to see for a distribution or a redistribution, is no intention to buy up here. So far, this is still bearish on the lower time frame, so I wouldn't be considering taking a long for now. The only thing that would make me take a long is if we break this high, for example, because it's the high of this range. This is the last lower high if you want. We are currently on this range, so breaking this high is showing a bullish intention, test, and then continuation. We do have a lot of volume down here at the bottom. This could be, a very awkward situation would be that this is a sign of strength, but we don't have enough volume, so I wouldn't call this a sign of strength. Also, we saw how we engineer liquidity on the buy side. We got the liquidity and then moved lower. So for now, what I will be looking for is if price breaks this high, then I will consider taking long. Otherwise, this is still bearish, so there is no point on looking for longs for now. Okay, let's look at GU. Where is GU? I don't have GU here. GBUSD. Okay, so yesterday, in the live session, we were expecting these scenarios to happen on GBPUSD. Basically, when we're looking at the charts here, we're expecting this order block to be tested, and from here continue selling off into this point of interest here, which is the backup of an accumulation that we saw. We can see a price did make a move to the upside, grabbing liquidity. We can clearly see that price build liquidity on the both sides of the market. they took the sell side and then they took the buy side and then reversed. The bias was bearish and it was correct, so price moved very well. Yeah, if anyone on my students got a short here, very well, nice, well done. Well, let's look at the 1 hour charts and see what is the new information. I think we are still good to think that price needs to hit this level since we are on a bearish trend now. But let's look at the 4 hour. Okay, the last structural point on the 4 hour was this one, makes sense. High, 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 low. 1 hour, we have this reaccumulation that was broken and tested by this move. So yeah, I think price is definitely, I think my bias is that it's going to keep continuing lower, and from here I will look for longs because overall on the higher time frame, GBP/USD is bullish. Okay, and I think the next logical target is going to be this high. Well, we had an alternative scenario here. If we look at the daily chart, the other scenario is that price grabs the liquidity below this low, because you have to picture this. This is a daily range, right? We have this lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high. Okay, that means that this is the last high low on the weekly chart, on the daily chart. This is where smart money accumulated orders the last time. But if we look at the weekly, what is the weekly telling us? That the last higher low was this one, the last higher high was this one, and now price simply is reaccumulating orders probably. Okay, we can see here on the weekly we do have some pullbacks, are the same that we saw on the daily, but it's not as important. Let's see. Yeah, I think my bias is that it's going to hit this level and attempt to go higher from here. That's my bias for GU. And on the lower time frames, on the 1 hour, we had a consolidation that was recently broken. You can see right after breaking this consolidation here, price came back and tested it with this wick. So this is an order block on lower time frames. And now price is coming back to test that order book, and the next logical step for price would be to go underneath this low. It makes sense. Well, we do have to know that on lower time frame there is probably an accumulation here. Let's see. No, we don't have an accumulation. We actually are building a distribution here. Primary supply, buying climax, automatic rally, uptrust. So what I will wait for GU is for it to break this low and this low. And after breaking, it's probably going to test this range and continue selling off if it breaks. Otherwise, let's say it wants to do a deeper retracement, which is possible. I will look for price to get into this level. We have inefficient price action. We have the high of the day up here, containing daily liquidity. So if it fails on breaking, then the alternative scenario is that it's going to do something like this, fill this void, grab the liquidity, hold the daily high, mitigate this order block, and then push lower into its level. That would be the alternative scenario for GU. If I had to choose one, I think this one is very possible, because this is now seen as internal liquidity, this high and this high. Price grab liquidity externally from a higher range. I hope, well, this is a glitch, I imagine. Well, we will have to wait and see. We need to, every time we see a structure that is forming, we need to wait for a completion in order to take action and look for trades. Of course, if we go deep into lower time frames, we are probably going to see some scalping opportunities. But well, for now, for an intraday basis, I will wait for this to be broken and tested to go lower, or I will wait for price to get to this level to short from here. Okay, so you can see how I'm looking to short, because my bias is that price is going to go down here. That's my bias, so I'm looking only at shorts. Yeah. So what other pairs would you like me to analyze, guys? Look at Doge. Oops, is making the move that we were talking about earlier. For now. Let's look at GJ. GJ as well, look at this, beautiful. Moving lower, as we were talking about earlier. So there are many pairs that you guys are saying. USD CAD, I saw a couple of USD CAD, a couple of GBP AUD by the same guy. So I think we can look at USD CAD. So let's take a look at that one. I think I have it here, yeah. Okay, so my bias for USD CAD was to go lower. Last time I talked about USD CAD on one of my live sessions, I was expecting price to hit this level and continue lower, but my bias was to continue going much lower. We didn't have the test, and price continuing lower, that's okay. But let's see if we met the high time frame targets. The target is this low, so we got really near. Actually, we pierced this low here. Well, you can read this if you want. This is an very old chart that I posted in the Academy. Which, by the way, I want to mention that if anyone is interested in the Academy, the core thing about our Academy is not only the course, but our goal is to teach you and help you to achieve profitability using Airways or Smart Money, or if you want, you can combine both. Of course, that's up to each other. But the core things about the Academy are the live sessions and the one-on-ones, because it's not enough with a course. There are plenty of courses out there, even pirated course that you can even watch, but it's never enough, because if you don't have a proper guidance, you won't know what you're doing wrong. You can learn by yourself. I did learn by myself, but I spent a lot of time. I wish I had some mentor that would help me to be profitable earlier and not lose so much time and money. All of you guys, you have to consider being lucky, because before a couple of years ago, this didn't exist. The smart money concepts wasn't popularized, and if you wanted to start from Forex from zero, you didn't have information. All the information that you had, most of them doesn't work. There are a lot of scammers, a lot of fake gurus, etc. But if you're interested in the mentorship, I wanted to mention that you can use the link in the description, and we are running a 10% discount. So if you use the code BBS, you can actually join using a 10% discount. Anyways, going back to the charts, USD CAD on my highest time frame, my bias is to fill this void that we have here. We can clearly see that the monthly is bullish. Okay, I expect price to continue going higher, but first I want to see price coming into a discount level. You can see the same fractal over and over again. We have a distribution here. All this was a distribution, but multiple distributions on lower time frames. But I think the target for this current move down that we are seeing is this low that was just tapped. So we either continue going lower, fill this void, and then reverse and go higher, or we have a healthy pullback and then continue going lower. So let's see what is going on the daily chart.
I guess so. After this, I think we should show the showroom.
Yeah, sure. Well, here on the daily chart, the last distribution before this move to a downside that is happening right now was obviously up here. So if anything, if you want to take a long-term short, I will look for this level. And because of where price is now, is currently at a level grabbing liquidity from an old low, is coming from grabbing the liquidity externally below this low, the chances of price making a bullish retracement are higher than the chances of it continuing lower. So probabilistically speaking, it's healthier or better to look for longs rather than shorts right now, okay? But when price gets to a premium level, of course, the best thing you can do is look for shorts, obviously. So yeah, like, do you want to add anything else, or?
I think you said it really well.
Okay. What other? Well, we can quickly. Well, if you are not guys in the Discord group, you can join using the link in the description as well. We have the free stuff here, so you can interact with other traders such as you that are learning. We usually share some free analysis, talk with you. There are some students that are posting here a lot of good content as well, charts, etc. You can see the showroom where our students are doing amazing stuff here, testimonials, and well, this is the premium stuff, or not the premium, is more the member section where we send our ideas and we answer your questions. We post the live sessions, the session recordings, well, all the stuff that is in any academy or community. Okay, but well, going back to the charts, which is the thing that matters here. What other pair would you like me to analyze?
Can you touch on the showroom really quick? One other thing.
Yeah,
I just
sure.
want to show what the other students have been doing on there.
Yeah, sure. This guy is a beast. He eats FTMO account for breakfast. It's amazing. Yeah, you can.
So him, for example, CA78, he was able to pass this in how long did it take him?
One day. Yeah, the verification.
Yeah, and I passed
day.
it as well right there. You passed mine as well.
Yeah, you passed one recently as well. There is some people that told me in private message that because I was congratulating him on Instagram because of passing very quickly the FTMO, and there are a lot of haters out there that are always going to be complaining, and this guy was complaining about that it took 48 trades to pass this. But it doesn't make any sense, because if you are a scalper, it's obvious that you're going to have a lot of scalps in one single day if you want. And this guy clearly loves scalping, and he passed the challenge in one day. Well.
And I think what a lot of that might have been as well is using multiple entries for one trade.
Yes.
So FTMO shows the amount of trades, not the amount of the amount of entries, excuse me, not the amount of real trades.
Ah, that's why. Okay. Yeah, makes sense.
Yeah.
Well, there is a lot of people asking for Bitcoin. Do you have any Bitcoin count? I will do an analysis now on Bitcoin. If you have any analysis on that, we can mix them. So what do we see on Bitcoin? Are we bullish or are we bearish? Obviously, we are bearish. Okay, we are bearish. We had a bearish very good market structure here. Price is going lower. So if we want to take a long-term short, we have to wait for price to hit this bullish order block here. Okay, that's what I have for Bitcoin. I'm just kidding, obviously. I wish I could chat with you directly, but on voice, so it's funnier maybe, or easier to do. But well, we are obviously on a bullish trend on Bitcoin. You don't need me to tell you that. So at this stage, this is parabolic, and you know that when Bitcoin moves parabolically, it doesn't stop until it stops and it turns all the way around. For example, if we look at the history here, if we expand the chart, these parabolic moves have been happening for a long period of time. It's not new. Look at this move. 1,500%. And what happened then? We had a retracement of about I would say 90% more or less here. Then what happened? Another parabolic move and another big retracement. Look at that. 90% retracement. So I'm not saying that we are going to see a 90% retracement right now, but we are definitely going to see a retracement. And I think this retracement is likely going to end up stopping around this level, because the fact that there were a lot of institutions and big players entering into Bitcoin, it made it more popular basically. And this institution, I know that they have been accumulating at this range, so it makes sense for price to build liquidity on the sell side, stop everyone out on the sell side with a sharp move, and then quickly reverse to the upside, okay? So we can see here, looking at this structure on the daily, that price is bullish, okay? We made a tiny stop hand here, price made a higher high, higher low, higher high. And now price is grabbing the liquidity below this low and making a quote-unquote downtrend, okay? So what I do see here is that this is going to end up being a reaccumulation. We are probably going to see some support here. Price is going to start building some liquidity and then with a sharp move, taking everyone out, inducing sellers, and then quickly reversing to the upside. That's very possible in my opinion. But overall, I think on the long term, this is a level where Bitcoin is likely going to bounce from this level, because this was a reaccumulation that was broken and never tested. Okay. Do you have anything to add, Blake?
Yeah. It always fascinates me to see how similar of an overall analysis we can have with such different strategies. Let me go ahead and share my screen.
Yep.
Can you see it?
Yeah, I can see your screen.
Okay, perfect. So here's the overall longer term analysis that I have on Bitcoin. I have it coming from a relative low over here. We have a first wave up, second wave down, third wave up, fourth wave down, fifth wave up. And then now it's very, very clear I also agree that we're in a short-term corrective wave pattern. So we should be in the final C of this correction on Bitcoin. What that basically means is that after this next wave finishes, then that should be it. After that, I think we're going to have a steep move up. I also don't think this is ready, just like Dogecoin. I also don't think it's quite ready just yet. Very, very similar on those two. And as you can see already, I think that we've already formed the A and the B of this fourth wave. I think this fourth wave isn't quite ready yet, which is why I put it out just a little bit. We can double check that on a smaller time frame. Let's go on a weird time frame, like 45-minute. And we can use our ABC pattern to determine that we had an up wave, a down wave, and now we should be expecting one more extremely short term. This could happen today or tomorrow. It could be a little longer. It could be tomorrow as well. It should be today or tomorrow. Basically, we should be having one more small up wave, and that will be then ready for a potential short. I noticed there's some potential of some sort of other smart money stuff over here as well, so that you can definitely combine these two analysis types, where you can see that the overall structure, there should be a C wave coming up pretty soon. We shouldn't really be breaking too much into this one wave. We are in a C wave, so it's allowed to break into that, but it shouldn't be breaking into it by very much if it does at all. And then we should have a 5-wave structure down basically after that. So we should have something along these lines. Just gotta fix a degree on that one. And then I'm gonna zoom back out and I'll show you what it looks like overall. So go back on the 4-hour chart. We get our buy position tool right about there. So, and if we look at that, our C wave would then follow that rule that I was explaining earlier, where the C should finish near the 4 of that other degree. So we should be finishing pretty soon here. Oh, this would be the wrong degree. This needs to be 1 degree higher. There we go. So this C should finish near this 4. And then we'll have a huge up movement after that. I think this is when we can see Bitcoin becoming in very, very relevant into quite a high number after that point.
Yeah, 100K probably.
Yes.
Yeah, definitely.
Takeoff would be way up there. Yep, that's all I see for Bitcoin.
Nice. Okay, guys, we have 10 minutes left. Then I have to do another things here. So if you have any other question, please let me know. And if you haven't liked the video, like it right now, because I think we are providing relatively good content, in my opinion. So the only thing I ask for you guys to do is to give a nice thumbs up. Well, what other coin can we look at? Let's review some of the pairs that we were looking at earlier. GBJBY doing the retracement that we were talking about. I want to come back to Aussie because it's forming a nice accumulation here. I think this was a spring. This was a sign of strength here of the overall trend that we have here. I think price is ready to go higher on Aussie against dollar. So yeah, I think this is an order block that is going to be sustained. We have a lot of volume here into a discount level. We can see the process of manipulating the highs, inducing buyers, and then taking those buyers out, and that happened once and twice now. Okay, so I think price is, if it is not ready right now, is very likely going to be ready very soon to make a nice push to the upside. What else? On GBP/USD, nothing yet. Oh, actually, I had 2 GBP/USD. I had GBP/USD open already. That's why. What else? Well, gold long term, USD/JPY. This one too long from down here, and Bitcoin. Yeah, I don't see anything else here. Let's see if I have any other old chart here just to check. What do you have on easy? Nothing. Nothing here. Euro JPY, and I don't have nothing here. Oh, this, I forgot about this one. Yesterday we analyzed Euro AUD, and we called a long from this level, this point of interest, and it played out beautiful. It was amazing. And our target was the previous month week and the previous month high, and both targets were met in one day. It's beautiful. It's beautiful I love when it happens quickly, because I'm very impatient, so the quicker it happens, the better. Well, anyways. Could this be a weekly thing? Well, this is something only for the students that are in the academy. We are doing this to help the community. If you have been watching my videos, you know that I don't save nothing to myself. I explain pretty much everything, so you can learn from there if you want. If you want, obviously, more guidance, you can join the mentorship. The recording is going to be available in the YouTube channel for sure. You can rewatch it as well. And yeah, I think we can wrap this up.
Yeah, sure. So if anyone's looking for advice on prop firms, if you want to know which one to pick, that's kind of my specialty.
Yes.
So if you are looking for that, head on over to my channel. If you're looking for more smart money related stuff, then this channel you're on right now is definitely going to be the best place on YouTube, in my opinion.
Yeah. Blake is always investigating about prop firms, looking the pros and cons, and actually, thanks to Blake, there are many prop firms that are competing against each other, providing better conditions for the traders. Because in the end, the prop firm is a business, and the more competition there is within that business, the better it's going to be for the user or the client, which we are the clients. So well, thank you, Blake, in name of everything, because it's a job. Investigating, talking, making interviews with the founders of each one of the prop firms. So it's a hell of a job, and you're doing it very, very nicely.
Appreciate you.
So well, guys, I hope you enjoyed this live session. This is basically what I do pretty much almost every day. If you did enjoy, don't forget to subscribe if you're not, and like the video, because it really helps. And well, I hope you have a great weekend. Stay safe. Remember to backtest. If you're not backtesting on Saturdays or Sundays, backtest. If it is boring for you, find someone to backtest with you. Remember to join our free Discord. You can maybe find someone that is backtesting, and you can make it funnier or easier to backtest with another person who is looking exactly at the same thing. So I think creating a nice community, studying backtesting community or trading community as well, obviously, it's very nice. And unfortunately, trading is a very lonely job. If you're trading, most of the time you're going to find yourself trading by your own. So it's good to have a community to chat with, to change ideas. So I really recommend you to join the Discord as well. So thank you all for joining. Thank you very much. Thank you, Blake, for being with me here.
Yeah, of course. Happy to be on.
And well, guys, see you in the next video. Okay, stay safe. Bye bye.